Well, there is a report from Bloomberg that AstraZeneca has made a preliminary approach to Gilead about a potential tie-up. We're talking about what would be the largest deal ever in the pharmaceutical industry. AstraZeneca is a $140 billion company. It's the UK's largest drug maker. Gilead's market cap is nearly $100 billion. So is this realistic? Does this deal make sense? And could it actually happen? We are joined now by Michael Leuchten. He is the head of the European Pharmaceutical Equity Research Team at UBS. He's joining us on the phone from London. Our Anjali Kamlani is also with us. She's our pharmaceutical and healthcare reporter. Michael, you write in a note today that at first glance, this was not necessarily something people were thinking about or something that made sense. But then you said on second appraisal, perhaps it makes some strategic sense. Why is that?
Yes, so absolutely. The reason why we're saying at first sight that the sense might not be quite there is simply the therapeutic overlap, and also in a way maybe the sort of philosophical setup of the two organizations is not quite a straightforward tie-up between two companies in the sector. However, what you are looking at is AstraZeneca being a cash poor and a pipeline rich company, and then Gilead pretty much being the exact opposite. So quite a good cash position plus good cash generation for now. And the tie-up could make sense from that perspective, where you would effectively add what AstraZeneca needs today, and then you're basically diluting a longer-term growth perspective. The latter is really where I think the market is struggling most with a potential tie-up here. Is sort of the dilution of the growth profile is really where the questions would be for some investors.
Michael, Anjali here. I'm curious about, just comparing the idea that AstraZeneca, which is pursuing, the vaccine production, Gilead on the treatment side, but then you have these two companies that the timing of it, number one, the two CEOs know each other from Roche, but then the timing of it happening, the call apparently happening around the time that remdesivir results came out. Does that show you any sort of indication about further, looking at the strategy and what the potential is there?
Yeah, so I'm not sure that that's the way we were thinking about it from a timing perspective. I think it's more that the commitment that AstraZeneca has made to be part of the push for a coronavirus vaccine, the commitment to over 2 billion doses, that is quite meaningful, and that's clearly requiring a fair amount of investment. And that goes back to, we've written about it in the past. AstraZeneca's cash generation hasn't been all that great whilst the company is going through the repositioning that it's going through. And it's now added an incremental burden on top of that by committing to the development and manufacturing of the vaccine. And I think that's why maybe you can bring COVID into the equation. So thinking about it from a vaccine versus antiviral treatment, not entirely sure that comparison holds, but certainly need for capital allocation is possibly something that could be relevant here too.
Michael, as you look at potential deals like this, is there concern that regulators may have lost an appetite to approve these kinds of deals going forward? I know in the United States, there is the whole talk about forcing through legislation companies to bring back to the U.S. production. So maybe the regulators aren't open to it.
Yeah, it is possible. I mean, we've seen some rumblings in the UK, thinking about that as well from a UK perspective. It is entirely worth taking into the equation and adding that to what's doable and what isn't. I think the pharmaceutical industry is fairly globalized, and I think pulling that back into a more nationalized way of thinking about the sector is maybe a little bit tricky. But yes, I think the regulators are clearly looking at this and trying to assess what they would like to happen and what they wouldn't like to happen. So it is possibly a stumbling block as we think about how the sector will develop over the near term.
And Michael, what about the timing of during the outbreak that this discussion seems to have come to light? Are there indications about maybe what the industry or what AstraZeneca itself is looking at long term as after the pandemic?
Yeah, so I mean, AstraZeneca is really, really well positioned from a pipeline perspective. They're been extremely productive in terms of the R&D. That's not what we're criticizing. Our sell recommendation on the stock's really based around the CFROI, but in terms of the success the company has had around key products like Tagrisso, like Lynparza, like Imfinzi has been pretty extraordinary, and the repositioning of the company overall. So we don't really see that a need for an aggressive addition to that in the near term. Beyond that, and I do think that's where the Daiichi tie-up came from on the product called Enhertu. That's really sort of a 2025 plus time horizon where I do think there's potential to have to add to what the company has today, but they're not really that pushed for having innovation or needing innovation that they currently don't have. They're pretty good at that. It's more that they'd like to do more of the same, and that requires capital, and they don't currently have that.
Michael, finally, just to broaden it out a bit, I'm curious, if this deal doesn't happen, are you anticipating some other deal activity within the pharma industry, whether it's Europe alone or European tie-ups with companies based elsewhere? Do you think we're going to enter into a period of increased activity?
Yeah, so the answer is clearly yes. So if you think about the pharmaceutical sector, the lifeblood or the lifeline of the industry is R&D productivity. R&D productivity is pricing power. And that means the industry needs to go up the intensity curve, both in terms of the capital allocation, but also the risk that the companies need to accept. And that means inorganic additions to the portfolios. So yes, we do expect an increasing amount of deal activity across pretty much all sizes, maybe not mega mergers, but certainly on the small to mid-size. And companies will be looking for platforms. Companies will be looking for products that fit their existing portfolios to leverage the infrastructures that they have. It's all part and parcel. And I think most companies are pretty honest about the fact that they can't do it all themselves. They have to look externally.
Makes sense. Michael Leuchten, thank you very much, of UBS. He's the head of the European Pharmaceutical Research Team, Equity Research Team over at UBS. Thanks again.
Hey investors, Zach Guzman here. Are you interested in learning more about the markets and getting the latest financial news? Well, then click right here to subscribe to our Yahoo Finance YouTube channel. Get the latest up-to-the-minute market analysis, big interviews in the world of finance, and information on how to manage your money every day wherever you are.